All right. Hello, hello. Welcome, everybody. Happy Tuesday, January 18th. And we are so excited to be here with you tonight. We have special guest speaker, Amandeep, and she is absolutely amazing on everything you need to know for business. So, if you're just hopping on and if you've never seen a broadcast like this on StreamYard, either above this video or below, it's going to ask you for your permission to see who it is. And just click the link and allow permission. And then we'll be able to see comments if anybody has comments while we move through this presentation and this evening. So before we get started and dive right into the questions, I would like you to just kind of tell us about you, who you are, where you're from, and get into this.
Okay, thank you so much, Kelly, giving me opportunity to speak here today. My name is Amandeep Singh. I am from Toronto, Ontario, in Canada, but originally I'm from India, and I'm CPA. I have been in accounting field for over 25 years, and I got three kids, 17, 15, and 12-year old. So hands full, but I love what I do, and I love helping small business owners, finding finding ways to save them taxes. It's just like, doing that satisfaction that you get when somebody saves, even if they're saving $100 or, even if they save $20, right? It feels good. Yeah.
Absolutely. That's amazing. And it's so true, right? So especially starting up your own business, it's if you've never been in it, right, it's kind of foreign to all of us and to start a business. So being here and asking these questions tonight is so special. And I want to thank you first off for being here and allowing your time with us tonight to ask questions.
My
Um,
pleasure.
and we're pretty excited. So we had a few questions come in, but we also have some other questions, and we will just go right into it. So a question that I have for you, Amandeep, is that can you explain the difference between sole propriety and incorporation?
Yeah, so the biggest difference is as a sole proprietor, like you're just kind of like self-employed. And when you're incorporated, it's a different legal entity, right? So your business is separate from you as a person. It's like its own entity. That's why they're called legal entities. Like you are your own legal entity for tax purposes, and your corporation is separate from you.
Gotcha.
Yeah.
Okay, so if you're incorporated, your business is completely separate from you
Yeah.
as a person.
Yeah.
And if you're sole proprietor, it's kind of like combined, right?
Yeah. Yeah. So then you're just as working as just a self-employee. So any income, any expenses, whatever you do in your business, when you're not incorporated, they all go as part of your personal tax return.
Perfect. Gotcha. Okay. And so what are the benefits and disadvantages of both?
Okay, so we'll start from like when you're just starting a business, right? So very big question that comes in, if I should incorporate, if I shouldn't, what are the benefits, right? So when you're just starting out, you have to consider, am I going to be taking whatever I make home, right, for my personal use? Or is this business going to be earning enough money for me to live in the business, right? So before we start talking about the advantages and disadvantages, let's first back out a bit and then talk about if I should incorporate or if I shouldn't incorporate, right? Because then
Yeah.
we'll go move into the benefits. So very first question you want to ask yourself is the cost that is going to be incurred when I incorporate, right? And number two is, if I am now incorporated, anything, like I said before, anything that my business is going to be earning, do I need to take all that money out for my personal use? or am I going to be leaving some in the business, right? Because when you incorporate, like there are extra costs, right? First cost is for you to incorporate, which is not that much if you incorporate federally versus provincial, right? So a little bit like government fees, and then the fee you will be paying to the lawyer or to the accountant for incorporation. So there's like cost at the beginning, and then there's yearly cost for you to maintain your books, to do the tax returns, for you to maybe hire a bookkeeper if you're not able to do it yourself, right? So there's those costs. So if you are going to be like, if you're in the beginning stage right now, and you don't have you don't have much income coming in, you're just a startup company. So that's the very first question, right? So that then you should just wait until you become in a stage where okay, at this point, I can start, my business is growing, there's more income coming in, now I can start doing a bit of a tax planning.
Okay.
So the advantages are, for incorporation, the advantages are that you are able to do more tax planning as an incorporated company than you are in your, if you're just self-employed. So number one advantage is that you can split your income with your spouse, with your parents, or whoever else you have in the family with a lower income bracket, right? And on the other hand, if you are just self-employed, whatever income you earn, it's your income. You cannot split, right? Unless that person is actually working for you, right? Then you can do some splitting. But there's way more tax planning that comes into place as an incorporated entity. And then the other advantage of incorporation is how you pay yourself. You have different ways that you can pay yourself. Like you can pay yourself a salary, you can pay yourself as dividends, you can issue yourself loans, and you can decide, maybe one year I want to only pay myself, let's say 50,000, but next year I need extra money, so I'm going to pay myself 100,000, right? So you can decide when to get paid, how much to get paid. And if you're incorporated, you cannot do that when you're self-employed. So whatever you earn as a self-employed, you will have to include in your personal income, right? So as a like when you incorporated, the tax rate for the business is lower than your personal tax rate. So it's always more advantageous to leave money in the incorporation, right? For the long-term planning, because once you grow your company is like legal entity, right? It has its own credit history, it has its own, like it develops history, and then when you go to the banks, it's easier to get loan when you leave money in the company. The disadvantages are, like the extra cost that you have to incur at the front end, and every single year, maintaining the books, getting your accountants to do your bookkeeping, or hiring a bookkeeper, right? And then filing 2 sets of tax returns.
Okay.
Yeah.
Awesome.
Yeah.
That is very visual. I can see all of that. It makes total sense.
Yeah.
So, a question I have too is, what is a financial statement?
Yeah. So financial statements are, so let's say you have all the transactions that incur in your business. So, for example, you start a business, you bought a laptop, right? And when you buy a laptop, you are going to pay cash for it, and then so you credit your bank, and then the debit goes on as an expense for the company, right? So, and then you will have other office supplies. You will be issuing invoices to the customers, right? So those are all transactions that are happening in your business. And then when you take all those transactions, they then go into income statement and a balance sheet. So income statement, balance sheet, and then cash flow, those three statements are called financial statements. So every single transaction has two entries, debit and a credit, right? So majority of the time, your debit or credit, one side will go to your income statement, or some people call it P&L, profit and loss statement, and the other side will go to your balance sheet, right? So at the end of the day, your income statement is basically your revenues and your expenses. Revenue minus expenses is your net income, right? And that net income closes at the end of the year, because you start fresh, beginning of every year. It rolls into your balance sheet. So basically, the balance sheet is your Bible. That is the most important statement for your company. That is what banks look at when you go to get loans, like how strong is your balance sheet. So balance sheet basically tells the story of your company. For somebody like, the banks or your accountant, when they look at the balance sheet, they can tell how strong is the company, like what assets you have, what liabilities you have, what is sitting in your equity, right? The similar to our houses, like our houses have equity. Same way your business has an equity. That equity it grows as your company's profits grow. And then if you're going to be taking all the profits out personally, then your equity is not going to grow, because you're bleeding your balance sheet basically.
Gotcha.
Yeah.
Absolutely. So, do you have any recommendations for, a best software to use or something that you use to keep your financial statements organized?
Yeah. So in the beginning, if you're just starting out, to be honest, you can do it all in Excel. All because you just need to be organized, right? So basically, in the beginning, your bank statement is everything. So anything that goes through your bank, you just want to make sure that you just keep a record. You can just do that in Excel. You don't need to invest in software. But there are really cheap softwares available now. Mainly like QuickBooks is very famous in Canada and even US. In US, a lot of people also use it's called Zero. They're very cheap. Like you could buy a simple one for about $15 a month subscription.
Okay, awesome.
And there, because if you do use a software, it is going to keep you organized. And then at the end of the year, when you go to your accountant, you just give them access to that. So they will have everything to do your taxes. They don't need to bug you for things.
Awesome. That makes it a lot easier then.
Yeah, yeah,
Yeah. So, so you don't have to worry about it, right? You just give them
yeah,
the login and they go for it.
yeah.
Okay. And so, how many financial statements should a person have?
Everybody will have, it's just one set of financial statements, like income statement and balance sheet. The cash flow statement is mainly used by larger companies. So cash flow statement basically tells you the cash position of your company, like where the cash is coming from. Is your cash coming from operating activities, or is it coming from investing, meaning like are you the one putting money into your company, or you have other investments in the company? So it just tells you like the cash generated from your main source of activity versus cash generated from other activities. But for small business owners, you just need balance sheet and income statement. That
Okay.
is what banks will ask when you go to the bank for any type of loans.
Okay.
Yeah.
Awesome. So if I only had one statement and I wanted to review an overall health of a company,
Mhm.
what statement would they use and why? I think you kind of touched on that a bit.
Yeah, you wouldn't if to review it's the balance sheet is the main source, right? But anybody that you will go to, like say if somebody needs to value a company, for example, you are now, you grow your business, but you want to sell your business, right? They will always ask for balance sheet, right? And last 5 years of your income statement, because they want to see the trend. So you
Yeah.
need both. Yeah.
Okay.
Yeah.
Awesome.
Yeah.
So what are some ways to increase cash flow?
To increase cash flow is first number one is your revenue growth, right? But if you sometimes what happens is you do have good revenues, but you have no control over the expenses, right? Sometimes uh, businesses they don't spend, they cut cost, but they don't cut cost from the right places, right? Like so it's very, very important for you to know which areas of the cost you should be cutting, with where you should be spending money. So to do that, like just having a really organized books, if you are really organized and if you review your financial statements every month, you'll know where your cash is going. So you see, like if you don't wait until end of the year, what actually happened in my company, just looking at, okay, what I'm earning, let's say I'm earning $500,000 a month, but my net cash flow coming from business is going into negative. So I'm definitely not doing something right, right? Either I'm taking way too much money out of the company for my personal use, or my operating expenses are too high, right? Like, am I spending too much on the advertising, or, your um, the cost of sales? Like, if you're in a product, let's say if you're in a product-based company, is your margin too low that it leaves you nothing for not much for your to cover your operating expenses, right? So first you have your revenues, and then you have direct cost of sales, right? So for 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 your business, for example, right, your direct cost is your own time, because you're not really
Yeah.
selling any product. You're just selling courses, or you're selling your own time, right? So any time that you are spending creating the materials, or paying yourself, those are direct cost. And for you, like, your indirect cost will be if you are paying, let's say if you had an office, you paid office lease, you have your utilities, you got your phone, your internet, etc. Those are indirect. So if after paying your direct costs, if there's not enough money left to cover your operating costs, then you need to see, okay, where am I going wrong? So it's just like reading your numbers. Like, if you look at your financial statements, they tell you a story. So you have revenue, and then your gross margin, like after your, I know these are technical words for some people. So after you have your revenue after the direct costs, the margin that's left, if it's only, like, say only 15-20%, but you've got all these other expenses to cover, that means you're spending way too much of your own direct time, right? So that you need to then look at, you know is am I charging enough? So it's not always the cost. Then, am I charging enough for my services? That could be the problem, right? Or if it's a product-based business, if you are buying a product from a third company, if you're outsourcing your product, am I paying too much to bring the product in, that my margins are so low because I cannot raise my prices up certain amount, right? Because you also have to keep in mind the competition, right? You cannot be charging too much for the similar products. So those are the things that you have to then dig into when you are analyzing your numbers.
Absolutely. I love that. So it's just being, excuse me, it's being mindful of, like you said, your costs, how much
Yeah,
you're charging, just being organized in all of the things you already talked about.
yeah,
So when you're sitting down, like however often you do it, whether it be weekly, bi-weekly, monthly,
yeah,
quarterly, and you look at, the income versus the expenses,
yeah,
just kind of like being organized there to sit down and see, does it make sense, right? Am I
yeah,
bringing in more than I'm spending, or
yeah,
am I spending more than I'm earning, right?
yeah, yeah.
Awesome. Okay, so any advice you would give somebody who is starting over financially?
When you say starting over, if they are kind of like, if they were coming out of some sort of like bankruptcy, or like, is in that
Um,
sense, like,
yeah, I'm thinking so. So this was a question from somebody here in the VIP group, and
yeah,
so yeah, I'm guessing completely maybe
If yeah,
bankruptcy?
so it depends. Like, are you, if they're talking about business, if they have a business, right? Or personally. So if you, when you're just starting over, if you are like a lot of times personally, if you want to build up your credit, it's just like being mindful, right? Making a budget, making sure that you, whatever you are spending, you know what you're spending. Like these days, it's so easy for us to, because we just scan our cards, right? We don't really use cash as much. So you don't really realize how much you've spent. So, doing, making the budget and then staying within that budget and then reviewing that, reviewing your bank statements on regular basis to see where you can cut, where you can save. This is very general question, so I'm not sure if they were talking about business perspective. You're starting over as a new business, like in the beginning, it is tough, right, for any business. So, and it's like in the beginning, you want to make sure that first year especially, whatever revenue you are bringing in, right, and then whatever you're left with after you are your expenses, you do have to pay yourself. We need money for our personal expenses, but just be mindful of, like, do I really need to take all this out, or can I, manage my personal with less, or if there's any other source of income that I can create to manage my personal expenses so that I can leave more money in my business for the future growth, or for if you have expansion coming in, like if you want to start maybe growing and hiring the team, even in the beginning stages, like if you do need help, instead of like bringing somebody on salary, bring them on a commission, right? That always helps, because you want to be mindful of creating fixed cost,
Yeah.
right? Yeah.
Okay. So what is fixed cost?
The fixed cost is like regardless of your revenue, you have to pay like your rent, regardless of how much you've earned, right? You gotta pay your rent. So in if you are, the types of fixed costs you can cut is, if you need help, if you are hiring somebody, instead of putting them on a salary, bring them in on commission, because then they'll only get paid if they bring in sales.
Gotcha.
Yeah.
Okay. Awesome. That was some good information, because I think in this time and day, like everybody you can see online too, is a lot of people are starting those online businesses. So
Yeah.
whether you had one and it went wrong and now you're starting over, or you're just starting from scratch and you're looking at ways to, financially get going and get started, that's an amazing piece of advice to, look at your time, what you're putting into it, the money that you're putting into it. But like you said, Amandeep, is that you're looking at, the success in your business and being very mindful and just
Yeah.
organized and
Yeah.
looking at it.
Yeah.
Awesome. So, what is the best timing? So, if you were to start a business
Mhm.
as self employed,
Yeah.
what is the best timing for
Mhm.
incorporating my business and
Yeah.
setting up tax accounts?
Yeah. So I think we did touch on it a little bit with earlier. The best time is when you are ready to do tax planning for your business, right? So now you've grown enough, you want to start leaving money in the corporation, right? And your personal tax bracket is going higher because you're earning all this money personally or as self-employed. So that let's say if you were earning $100,000, right? 1 year. And then now you're in second of your business is now bringing in $200,000 per year. But you don't really need that $200,000 personally. So you don't want to pay taxes on the $200,000. And yet you have a spouse who is in a lower tax bracket, right? So now you can incorporate, and then you can hire your spouse to, you can just say that they are helping me do my admin stuff. So now that 200,000, you can split some of it with your spouse, and you don't have to pay yourself as a salary, right? You can pay yourself That's the biggest benefit. So this $100,000 that you want to pay yourself, you don't have to pay that as a salary. You can pay yourself as a dividends. When you pay yourself as a dividends, it's at a lower tax bracket because your company has already paid taxes on it. Or you could even take, if you say, okay, you know what, I don't want to pay any tax personally, but I need the money, but I only need the money for short term, right? So you can take loan from your corporation and then use it, but then you have to repay it within a certain period of time, within like 2 years, before it gets included in your income. So there's like all that type of, we can't really go too much deep into the tax planning because it depends on everybody's personal situation, and then it's just way more deep. But like you can just then talk to your accountant and then ask them, like, this is my, you always have to look at your personal tax brackets, right? Your whole family's as a whole income and your business, right? So then they will prepare a tax plan for your business and your company to make sure, sorry, your business and personally, to make sure that together, right, you guys save taxes.
Yeah.
Yeah.
Makes sense. So it's just being, sorry. Once again, it's being mindful of the success within your company before you look at that and wanting to incorporate.
Yeah, like in the beginning, in the first year of the business, there's not going to be much. Well, I mean, I shouldn't say that, but you could be earning $1 million in the first year of the. If you are earning $1 million per year, then you definitely should be incorporated, right?
Yeah.
When you go over, like, for me, like if you're kind of going over to 150,000, it's good to incorporate 200, like $200,000 sort of income.
Okay, perfect. Yeah, because the second part of that question was I'm just starting out and I don't have much cash flow yet.
Yeah.
So, like you said, then, so you would want to make sure that the cash flow is there
Yeah.
before you would incorporate.
Yeah. Yeah.
Ah,
There's not much, then wait. Yeah.
wait until you have more
Yeah.
cash flow coming in. Yeah.
Yeah.
Okay, and then there's one more question. So, is there anything to consider when setting up my business to protect it as I go through separation from my husband?
Yeah. So your business, when you if it's incorporated business, um, so your business will have shareholders, right? If your husband is not a shareholder of their business, then it has nothing to do with him. Then it's protected. But if when you incorporated, if he was a shareholder of the business, depending on that share, right, then he owns part of that business. So it just depends on how this business was structured from the beginning. But if they're just starting out and they are going through separation, then they want to make sure that when they incorporate, of course, at this stage, they're not going to be, the husband is not going to be the shareholder.
Gotcha. So it's depending on how you completely set up your business from the
Beginning, yeah.
awesome. Did you have any other things that you normally give advice on, or did we cover most of it?
I think one thing that I would like to cover is when you are incorporated, like one advantage we did not touch on is that you could buy, a lot of people don't know that you could buy an insurance policy through your business, that when you as a beneficiary, or whoever else is your beneficiary, they can take money out of the corporation tax free. So when you are growing at a certain, oh, my computer's dying, hold on a second, sorry.
That's okay.
Oh my God.
They're good. I can still see you. Are you there, Amandeep? Oh, there you are. Sorry, guys. Her computer just was dying. There we go. She's just plugging it in here. Oh, and we lost her. She may come back. She says it's frozen. We'll just see if she can come back here. Sorry about that, guys. But this is amazing. So there's so much information here. So make sure if you're watching this on the replay that you pause it and take notes on certain parts or questions that you maybe didn't know and you need to know, because all of this information, whether it is a brand new business that you're starting or being a business that you've been in for a couple years or a long time, it's great to know all of this information. So when it comes to, tax time every single year that we go through, it's not, like a big scatter or a big mess and you're not rushing around trying to find everything. So this is very, very amazing. Absolutely so much information here to be heard. And just a second, let me re-invite her. Paste. We'll try this again. But yes, it's very, very good to know, because like we all know, personal tax return or business tax return, if you're self-employed or incorporated, we know that time of year it can be very overwhelming. So to set yourself up this year following these steps is very, very beneficial. So next year around this time, when you're going through all the things, you don't have all of the clutter and the scatterbrain and having to find everything at the last minute. So many amazing tips here today. I'm not sure if Amandeep can get back in. If not, that's okay. And yeah, so it's absolutely awesome that we got to share this with you guys. I want to thank Amandeep. Oh, here she is. We can get her back in.
Going from the phone, it's frozen on my laptop.
That's okay. It's all good. I was just saying that, if you're brand new to business or if you've been in it a long time, to watch this replay and pause it and take notes on all of this, because it's such good information.
Yeah.
But I'll let you go and start back from what you were speaking on before we froze here.
Yeah, so I was talking about like one of the biggest advantage of incorporating when you are at a good point in business is that you can get an insurance policy through your business, right? Even though that the premium that your company is going to be paying, they're not deductible for the tax purposes, but the money that when you take it out, it's going to be tax free, because a lot of those policies have they generate value, right? It's not like only after you die that somebody will benefit, but you yourself, when you retire, you can take out the money and the cash value that it's going to generate, because most of the time those type of policies, they have pretty good cash value. So like you can have savings for your retirement.
Awesome.
Yeah.
That's great to know. I didn't know that you could take or you could get insurance policies in your company.
Yeah. A lot of people don't, and it is actually for companies, like the businesses that are doing like really, really well, this is the one thing they always put in place. Like some people that I know, they've got like they pay like $6,000-7,000 a month premium in there for their insurances, because they're generating all this cash value. It's putting going away for their retirement.
Wow, that's amazing.
Yeah, and it's also also like if something happens to you, for example, and then your beneficiaries, they'll get at least that much money, like to make sure that your business is taken care of there was debts and stuff like that, right? They're paid off. So it's really good to have.
Yeah, absolutely. Such good information. Just before we head out here, I just want to make sure if anybody that's watching has any comments, if you want to drop them now before we get off, that would be awesome. But I do want to thank you, Amandeep. It's been amazing. I learned so much. I mean, I thought I knew most of it, but I know for sure now I'm going to actually go back myself and to make sure I take some notes because it was so informative. Sorry. But yeah, that was amazing. And did you have anything else that you normally talk on or any thing you can think of to share with
Yeah.
them besides what we spoke about?
Yeah. So one thing is that start like now we are only in January, right? So mostly companies will have December year end. Start doing budget now, right? And don't leave your accounting to the last minute when it's time to for you to do the taxes, because then it gets overwhelming and people can't find their receipts. They don't know what transactions that happened like 10 months ago if you don't keep good record. So do that. The other thing that I wanted to say is I just lost my thought. Yeah, if you are not incorporated, if you're just self-employed, make sure you open a separate business account, right?
Okay.
Because if you mix your personal with your business account, then you're going to have such a hard time at the end of the year carving out your transactions that were business related versus personal, especially like some things like if it's meals and entertainment. If you don't know, like like you know how you can claim your some of your meals as your business expenses. But if you are taking your family versus you're taking somebody on a business purpose and you go to the same restaurant, you're not going to remember, right? So
Yeah.
keep business costs separately. And also, like if you are somebody, if you're a business but you're working from home, like you don't have office outside, but your home office is your office, right? That you can claim your utilities, your internet, your car expenses and all that, those kind of things that you can claim. I think a lot of times, a lot of these credits that people can take, they don't take because they're not aware that they can expense some of their house expenses as part of their business.
Beautiful. So I actually learned that last year, and I think what they say is it from like the living quarter. So if this was my office here, which it is, it's the square footage,
Yeah,
right? And
yeah,
then this, yeah. So that's awesome to know if you are home based,
yeah,
that you can write off like your utilities, like you just said, your utilities, your internet bill, your cell phone bill,
yeah.
um, stuff
Yeah.
like that.
Repairs you did, like if you painted your office, any furniture you bought for it, right? So you can write off all that.
Beautiful, awesome. And then home renovations too, right? If it includes part of
Yeah,
um
your
your
office renovation, yes, definitely.
awesome, beautiful. So I was going to ask you, so how you said you keep all expenses like I was just saying when you were coming back on here that all of this information is so amazing and we're so grateful to have you here today because we don't want to be so scatterbrained and unorganized at the end of the year when tax time comes. So, do you have like an actual like hands-on system that people can use, or like I know there's the envelope system where you can keep your receipts in envelopes, but do you have any hands-on systems for that?
So the best thing is we all have the phones, right? Just create like a folder. If you don't have time, just at least if you can create a monthly folder, right? And just like scan everything into that, because then if you just, instead of dumping them like all in one place, if you create monthly folder on your laptop and then just push the receipts there, so when you go to your bank reconciliation, right, you already have everything organized by month.
Beautiful.
Yeah. And then if you are using cookbooks type of system, then all these platforms, they have like scanning system. So as soon as, let's say, you go to a restaurant, you have a receipt, you don't want to keep that receipt, take a picture, scan it over. So then you don't even have to keep the hard copies, right? As long as you have all your PDFs, then all those hard copies, you can just dump them in box, right? If it's already organized in a platform.
I love that. That's awesome. So awesome. Julie says, I write off everything. Anything I purchase, I use in my home daycare. So almost everything works as a write off. Awesome.
You write off everything, but you have to be careful that whatever you write off, it's incurred for you to earn your business revenue, right? So you have to really be mindful also that what you're writing off is a legit business expense, right?
Yeah, absolutely. Awesome. Well, I am so grateful that you were able to spend 45 minutes or so with us this evening, Amandeep, and bring your expertise for being in this field for over 25 years. And absolutely love all the information. Is there somewhere that if anybody has questions, they can find you, like on social media or?
So yeah, my Facebook it's public, so they can always find me on Facebook, and definitely, right, get the contact, my phone number from you guys as well.
Awesome.
Serve anybody who has a question. This is a good time actually to get an accountant and then get starting, do the planning for the year, right?
Absolutely. So good. So thank you so much, Amandeep, for joining us tonight and giving all this information to all of the beautiful people here in our VIP group. If we have any questions that come in later, I'll reach out to you and see if you can help me with answering them.
Yes.
And then also, like you said, if anybody has any questions specifically for you and they would like your feedback, I'll get a hold of you as well, and we can get them your information so you guys can link up.
Yeah, and also like my website, I don't know if you can maybe put it in the chat after. It's just the CPA.com.
Sorry, I had to cough there.
Oh, it's okay.
Awesome. Yeah, if you want to type that in the comments once we're off here, that would be awesome. So we can check you out.
Yeah.
But once again, thank you so much. We are so grateful that you were able to spend your evening with us here. And I look forward to 2022. It's going to be an absolutely amazing year.
Definitely.
Awesome. Well, thank you so much, Amandeep, and we'll see you later.
See you later. Good night.
Good night. Bye.